Good morning, welcome to GrainTV. It's October 12th, 2012. To my left is Logan Burgess and I'm Brock Shimbino. Grains are trading down across the board this morning. Looks like we're seeing a little bit of a reversal after yesterday's large rally after the reaction to the USDA WASDE report. Corn down about 11, soybeans off about 20, wheat in Chicago and Kansas City both down about 19 to 20 this morning. You know, yesterday, Logan, it looks like the market was really focused on supply side issues in the USDA report, but what we did find out is that we had some revisions to the demand side, especially to the export market. What are we looking at for export sales this week?
Yeah, Brock, well, this is the first export sales here, obviously on the heels of yesterday's USDA report, and this morning another abysmal report here for corn. The market was looking for around 300 to 400,000 metric tons. We actually came out with 14,000 metric tons, most of which were for the 13-14 marketing year. So certainly not a bullish story here for corn in the least. Soybeans below expectations as well. This is the first time in a couple weeks here we've seen soybeans lag. So demand for U.S. soybeans has been red hot here recently. If we look at meal, however, we did have a good week here. Market was expecting 350,000 metric tons there on the high side. Reported this morning was 678,000 metric tons. Wheat there on the low side of expectations as well. So on the export front, overall, not a great showing for beans. A lot of people were really watching that closely. Yesterday we saw that 210 million bushel revision for export sales of U.S. soybeans. No confirmation of that here today. Like you were saying earlier, though, it is a bit of a lagging indicator. We'll have to wait till next Thursday. This will be a continuing story here as we move through the winter. Another big source of demand, though, for U.S. corn in particular is ethanol. What are we looking at there?
Yeah, the ethanol industry, or Ethanol Information Administration, released their weekly update yesterday. Production did get an uptick of about 15,000 barrels per day. That's a little bit above where we were last week, about 1.9% ahead.
Yeah.
But compared to last year, we're down about 6.9%. So that's going to continue to be a story as we move through this marketing year. Stocks, on the other hand, actually increased quite a bit over last week, up about 2.5%. Compared to last year, we're actually up about 14%. So we're quite a bit above where we were last year at this time for stocks. This kind of shows me that, you know, ethanol producers are continuing to produce ethanol, but there isn't a lot of demand on the blender side of things for those ethanol production. You know, the thing to keep in mind here is how many bushels are actually going to ethanol. 84 million bushels last week went to ethanol production. We need to use about 86 million bushels a week to meet the USDA expectations. So we fell a little bit behind last week, but year to date we're about right on par with where we need to be. You know, this is kind of where what we're looking at on the demand side of things. You know, if I was a producer and I'm out in the countryside and looking to make some cash sales with the new harvest underway here, what are we looking at for basis levels across the country?
Yeah, Brock, well, we took a look at this here this morning as well, and as you can see here, we were looking at spot soybean basis right now. The weekly change from October 4th to the 11th. As you can see here, up about 4 cents in terms of basis along the river system. You know, we've been talking about strong demand for U.S. soybeans on the export front. Obviously, that's going to put a bid under that Gulf basis, and we see that carry throughout the river system here. Mostly unchanged to 3 cents stronger here for much of the Corn Belt. If we take a look at what happened here, corn over the same time period, we kind of had the same effect here, 4 or more cents stronger across the southern Mississippi Valley. You know, during this time period, we had barge rates taking a little bit of a slip too. So when barge rates move lower, elevators are able to bid corn a little bit more aggressively, so we see basis improve accordingly. Much of the Corn Belt, however, was unchanged to 3 cents stronger there right now, so we're going to have to keep an eye on basis here moving forward.
You know, if I'm a producer, Logan, and like I was saying, we're getting through the harvest this year. I'm looking to make some cash sales. What's your outlook for the remainder of the year and into next year for basis levels?
Yeah, Brock. Well, actually, if we look at basis here since September 1st, that kind of tracks basis throughout the harvest window this year as we had this very early harvest. Corn basis only slipped about 5 cents since September 1st, which is very, very low. You know, normally we see a harvest dip here in this market. 5 cents is a very small dip. I think tight stocks have really supported that. Soybeans took about a 20-cent dip here over the same time period. A little bit more of a normal number there than what we're used to seeing, but still not very dramatic there. And now as we get out of harvest here, as much of harvest is wrapping up, we see basis starting to ramp up. Does basis have serious room for improvement here over the winter? I'm not quite sure about that. If we look at the export demand for corn, it's really not there right now. That's going to have to pick up. If that Gulf basis remains relatively flat, demand basis appreciation is going to have to come from ethanol sector and feed users. Both of their margins have been crushed here recently by $7.45 corn here. So not a lot of good prospects there for basis improvement coming out of those two areas, but we're going to have to keep an eye on it here moving through the winter. Certainly a lot of moving parts in this basis market right now.
Something to keep in mind also is, these producers are pretty well off on their cash side of things.
Right.
Heading into the end of the year, they may not want to make cash sales for tax purposes, so they may hold on to it till after the first of the year. So for end users to actually get those crops out of the hands of the farmers, they're going to have to bid up those basis levels. So we could see a slight improvement as we head into
Yeah, certainly. Basis improvement could come from merchandisers there as well. We'll keep you posted on all fronts here, though, futures and cash market on GrainTV. I think that wraps up our show here for Friday morning. Have a great weekend out there. We'll see you back here on Monday.